Scott, thanks for coming in.
Oh, Carl,
good to see you.
Great to be here. Thanks for having me.
You've been pretty vocal on Twitter, at least, last couple of weeks. Your general worldview is that it's awfully hard to call an end to the bear market, at least in equities, right?
I think so. I mean, look, Joe, I thought Bryn's comment was really insightful, which is, don't fight the Fed. I've had the opportunity to meet with a number of the presidents and governors, and the theme is always the same, which is we're going to continue to raise rates until we get inflation under control. And as long as the sell-off is orderly, they're not concerned with the level of stock prices. So the bottom line is until we see some amount of panic here or something that gets the central bankers concerned, they are just, excuse the expression, hell-bent to get inflation under control.
So they're applauding days like today, in a sense.
They are, I think so. They would say, well, financial conditions need to tighten to some degree. And look, it's a sell-off, but we're not making a new low. And, if we make new lows in an orderly way, then that's good.
How do you think about an out-of-the-money Fed put, if one exists now?
Well, it's funny. I went to the central bank conference at Stanford a couple of months ago, and I went in there with that idea in my head. I walked out with, there is no price play here, right? They're concerned about financial stability, which is, sort of, it's kind of like you'll know instability when you see it, like pornography.
Or jazz.
Yeah, right. So, we'll make it up as we go.
Yes.
And so I was really surprised that they were not more willing to engage in a conversation about that there needs to be some sort of financial stability. Because, look, in the pandemic, we did something that we never did, right? We bought corporate credit, right? I mean, we raised in the bar, and I thought, man, or lowered the bar, and I thought, man, they're going to be sensitive to it, and they don't show any signs at all.
So do you, at this point, are you worried about systemic risks or instability, or is this all sort of going the way it's supposed to go? Is QT sort of like watching paint dry so far?
Well, it will be until it's not. And the way the expression I tell people is that the Fed and the central banks are going to press on this until they break something. And if you remember back in 1997 when we had the Asian crisis, out of the blue in 98, we got long-term capital, and all of a sudden they had to reverse course. There's been a number of incidents like that in the past. We had the pivot back in 2018. And so there's a tendency in times like this when the Fed is so focused on inflation that there's something that is coming up out of what they would call the shadow banking system, like a hedge fund collapse or something. And, that's where I think, it's hard to predict that kind of thing, but that's the thing I think we have to be prepared for.